wait, no, wait. This is the Brantford Exchange. This is Jordan.
This is the Brantford Exchange,
cool.
dude. If you don't already know, and if you don't mess with the Brantford Exchange,
then you living under a rock.
Then you living under a rock.
Under a rock, baby.
So,
all right, so today, though, we're going to be talking about making money in a bear market because we are still in a bear market overall. Stocks are still downtrending. And the first thing, let's talk about buying corrections first. So actually, so just to make note of before we even begin this, so in a bear market, obviously, the majority of stocks are headed down. You know, if you look at the Dow, if you look at the Russell 2000, the majority of the stocks that make up those indexes are in a downtrend or are in a bear market.
And yeah, just to go, so like how we always talk about the SMA, so that's how they determine whether something's in a down market or an uptrending market.
Yeah.
If it's trending below, I think they use the 200-day SMA.
So right here, I mean, you can look. This is the index for the S&P 500, and you can see here. What I was going to say was that in a bear market, so the same way that in a bull market, when the stock market is rallying, you're going to have corrections because it can't just keep going up and up and up. So you have corrections where the market will pull back. But in a bull market, when the market corrects itself and pulls back, obviously stocks are going to pull back and head downward because that's where it's correcting. If the overall market is going up, the corrections are going to be downtrending corrections. But it's the exact opposite in a bear market, whereas the corrections are now going to be right here. This is a correction. You can see this where the stocks rally and move upwards because the overall and the total direction of the market, if this will load, is going downward. You can see you can draw a descending triangle. But as you can see, this correction in the market, you can see here it was downtrending, it had a correction, and then it started downtrending again, it had a correction, and then it started downtrending again, and now it's had a correction, and it's going to start downtrending again, and it's going to continue to do that until the bear market is over and the bear market reverses, and we head back into a bull market.
Remember, what we always talk about here on this channel, we like to say, if it's downtrending, it's making lower highs and lower lows. So Look at this right here. You don't need to know anything about trading. Here's a high, here's a high, here's a high, here's a high. See how they all are descending, and then these lows keep getting lower and lower. So that makes sense. You don't need to know anything about trading stocks. That is going down. That's what it is. It's a downtrend.
And if you want to draw trend lines, I mean, you can easily see that that's a descending triangle pattern. Yeah, so I mean, you can easily see that's a descending triangle right there. So number one, how to make money in a bear market, how to make money in a downtrending market. You can, this is the simplest way to do it, or maybe not the simplest, but this is one way you could do it, is you can buy the corrections. If you know that a market is getting ready to correct itself in a bear market, then you can buy stock up right as the correction starts, because that is when stocks are going to rally, and it's not going to last forever. But if you were just in there for a quick swing trade or maybe a day trade, you can easily make money in a bear market that way, and that's just the first way.
So yeah, as Cole said, the first way, obviously buying the correction. I think that would be a little bit more for you traders that are comfortable with
understanding market trends,
and you guys are already comfortable with swing trading, because overall I think that if you are going to buy a correction, the overall markets, they don't move like a penny stock. They don't go up and down in one day. It takes a couple days for them to, their prices
so
to
for
fluctuate.
that one, it's definitely not the most simple, because you do need to understand the way the markets trend and the way the markets reverse, basically trend.
The second thing, and this is very basic, and I feel like a lot of people overlook this, when the market is downtrending, people are, they're constantly looking for blue chip stocks to trade, because if you're a beginner trader, you're going to look for something like Amazon, something like Apple, Disney, things that are easy, things that are advertised anywhere you look.
Things that you know of.
So what a lot of people overlook are bear ETFs. And what that is if you're not familiar with shorting a stock, shorting is when you take a position, and if the stock's price declines, you make money. Like, that's just what they call it, shorting. This is another way for shorting. It's called bear ETFs.
And this is a lot easier than actual shorting, because the real way to short is a brokerage will loan you shares of a stock that you sell. I mean, they will loan you shares and you immediately sell those shares. And then when the stock price drops, then you will buy back those shares at a lower price and return them to the brokerage, the same amount of shares that they lent you, but you profit the difference. Since you bought them back at a cheaper price than what they lent them to you when you sold for, when you buy them back cheaper and return them, you're going to make the difference, because obviously the stock, you purchased it back lower to return to the brokerage, so you profit the difference. But short ETFs, though, a lot easier. It's literally just like buying a normal stock.
It is no joke. No joke. Trade it just like you're buying a stock. We've been trading for a little bit combined. I mean, I've been trading for like 5 years, so combined 10 years of trading. I've never shorted a stock. I always use these bear ETFs.
Because
I
it's
think
just
it's
so
so
much
much easier.
simpler. It's
So
so
much
much
easier,
simpler.
especially for you guys that are beginners. So easy. If you guys don't have any faith in the market, you think it's in a downtrend, which you don't really need to think because it is. Obviously, you can see it from the chart, the technicals. This is what you want to do if
And
you
the
want to
fundamentals.
hedge the market.
So some of those ETFs though, so one would be SQQQQ, which is what I have pulled up right now. This is the short for the Nasdaq, if I'm not mistaken. You could go with the TVIX, which I'll pull up right now. TVIX. This is basically it's like they call it a fear indicator or a volatility gauge.
If the market's experiencing a lot of volatility, this goes up. So
Yeah.
the market right now is extremely volatile. If you look at a bull market, the whole market is just in an uptrend. Not the pullbacks aren't big. Yeah, it has a couple dips, but they're not what you're seeing now. When you start seeing a market have 600-point pullbacks in a day, and then the next day it's up 400 points, then the next day it's down 200 points,
This is a great play.
that's extremely volatile.
Yep.
Extremely. In a bull market, it will have strong runs, not 600 a day, but it'll have 200. It'll go up 200 points a day, 100
Strong,
points a day.
consistent runs, and then it'll
Strong
have short
runs,
little pullbacks.
Short 50-point, 100-point pullbacks when necessary, not every single day.
That's also why they call this the fear gauge, or they quote the fear gauge, is because when the market is volatile like that, a lot of that is fear selling or just spontaneous buying. And in that environment, TVIX is going to be going up. So when the market is tanking, or when the market is having some type of vicious decline, TVIX is going to be a good play for that. Other than that, you have the DXD, which is the short for the Dow Jones. It's basically the same thing as SQQQQ or TWM, which I'll also show you here. This is the TWM is going to be the short for the Russell 2000. The Russell 2000 is said to be like a pure play on American small cap companies, which is basically just small business. Any business that is operating inside of America is what the Russell 2000 is made up of. If you're going to short those stocks, then what's something like an easy short stock to get into would be TWM if you don't have confidence in the Russell 2000 or the companies that it's composed of.
Right. So let's just a little breakdown of this. So all of these kind of look similar because they do follow the same thing, which is volatility. So just a quick breakdown about it. If you look at it, it had this huge run, Christmas of last year. You see it peaked out at 23.82. So this is all for the volatility. There was a lot of things going on with, the tariffs. Whenever Trump speaks, there's actually, if you Google market volatility, whenever Trump is about to speak on something or whenever he tweets something,
Yep.
I've never seen anything like it before, and I don't think anybody has because this
or
is the
something like when Jerome Powell comes out, the
Yeah.
chairman of the Federal Reserve. When he comes out, if he gives a bad speech, obviously something like the TVIX will definitely, just go up after
So
that.
what we advise is if you see a lot of things in the news that are kind of promoting significant effect on the market. So if the Fed's going to speak, if Trump has a speech today, if he's meeting with another foreign leader, all these things, good or bad, before they happen, I guarantee you're going to see market volatility because people, investors, they are like, okay, this can go one of two ways.
Right.
And that's what volatility is. It goes one of two ways. It's either going to go up or down very quickly after that speech is given. So these are things that you need to look out
speech
for.
or even like economic data before let's say maybe payroll numbers are coming out or the Bureau of Labor Statistics is going to be releasing some type of economic data. It's the same thing prior to that too. People are betting on what that economic data is. Just like you guys and D-Gas when they release the natural gas numbers right before that natural gas report comes out, people are in the chat, and you can see this. I mean, if you are following any type of trading community, people are in there talking about which way they think it's going to go. Is it going to be you guys or is it going to be D-Gas? And basically, prior to that report coming out, they're just gambling. Before that, they're just, and that creates volatility.
And that's what it is when when the Fed's about to come out. You don't know what they're going to do. Nobody does, except them. So you are going to wait, and it's a 50-50 shot, and that creates volatility. The more certain something is, the less volatility there is. But
Absolutely.
With things like that, there's no certainty about it because we don't know.
Uncertainty equals volatility.
Exactly.
To sum that up.
So, like we said, just so I want to make this as simple as possible for people. When you see these ETFs, which are exchange-traded funds, they trade just like a stock. So don't let that term scare you away from buying into it. Think of it just like a stock. That's literally what it is. You just buy and sell exactly as you do a stock, except you're not buying in for that potential growth of one company. It's the whole index that you're tracking with
Correct.
these ETFs.
These ETFs are really easy to trade. All you got to do is just look at them and be able to follow the trends. You need to be able to follow the market, be able to pay attention to economic news that's coming out, be able to follow political news, for anything that's going to affect the market like that. And also keep in mind that in bear markets, you're also going to have corrections, just as you have in a bull market. But opposite of bull markets, in a bear market, the correction is going to be a rally where the market is going to move upwards. And right now, it's looking like our correction in this current market is about to be over, and we're going to be reversing and heading back down, which is why SQQQ looks good right now, which is why TVIX looks good, which is why DXD looks good, which is why TWM looks good.
If you guys have any questions, leave them in the comments below. We'll be sure to get back to you guys. Reach out to us on our social medias. We have an Instagram and Twitter. Those links will be in the description below. Like we said, get in our Discord chat, and that's pretty much going to do it today. So enjoy your Monday and have a great day.